Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about the terms hawkish and dovish, what it is, and where you're likely to see these terms being used. Dovish and hawkish are terms that describe a government's fiscal policy and also monetary policy. Like bullish and bearish, they describe opposites, but this time it describes the opposites of the policy rather than the price movement. Dovish describes an expansionary policy, when central banks are talking about reducing interest rates or increasing QE, quantitative easing, just to stimulate the economy, so that they are said to be dovish. If central bankers are pessimistic about economic growth and expect inflation to decrease or become deflationary, and they signal this to the market through their projections or forward guidance, they're said to be dovish about the economy. Some words that could be used to describe a dovish monetary policy includes weak economic growth, inflation decreasing or deflation, increasing the balance sheet, loosening of monetary policy, interest rates cuts. On the other hand, hawkish describes a restrictive policy. The term hawkish is used to describe contractionary monetary policy. Central bankers are said to be hawkish if they talk about tightening monetary policy by increasing interest rates or reducing the central bank's balance sheet. A monetary policy stance is said to be hawkish if it forecasts future interest rate increases. Central bankers can also be said to be hawkish when they're positive about economic growth and expect inflation to increase. For example, if a central banker is recently dovish, stating that the economy still requires stimulus, and then in a later speech says that they have seen inflation pressures rising and strong economic growth, you would say that the currency appreciated strongly against the other currencies. Some words that could be used to describe a hawkish monetary policy includes strong economic growth, inflation increasing, reducing of the balance sheet, tightening of monetary policy, interest rates hikes. Generally, the words used that indicate increasing inflation, higher interest rates, and strong economic growth leans towards a more hawkish monetary policy outcome. Hawkish and or dovish policies affect currency rates through a mechanism central bankers like to call forward guidance. This is when policymakers try to be as transparent as possible in their communications to the market about where monetary policy may be heading towards. Currencies tend to move the most when central bankers shift their tone from dovish to hawkish or from hawkish to dovish. A slight shift in tone from a central bank or a central banker could have drastic consequences for a currency. Traders often monitor, for the US, the Federal Open Market Committee, FOMC meetings, and their minutes to look for slight changes in language that could signal or suggest further rate hikes or cuts and attempt to take advantage of this. When hawkish policies are expected, the news is likely to be priced in, and you'll be unlikely to see huge spikes on the chart. However, look out for when a hawkish policy is unexpected or a change of tone is unexpected. Then you'll see sudden spikes, and they could be quite significant, and to take into account the unexpected hawkish news release. Anyways, guys, that's it from me for today's podcast on trading with hawkish or dovish and the terms used with the central bank's policies. Do remember to subscribe to our podcast at Here is IronFX. We're dedicated to bringing you the very best trading education to take your trading to the next level. Till then, stay safe and trade safe.